and we thought we'd take a look at Ramsay Health Care, the Aussie multinational buying UK-based mental health care provider Elysium Healthcare for just over $1 billion. Elysium is a mental health, learning difficulties and neurological issues specialist, has a partnership with Britain's state-backed NHS healthcare network. And so, yeah, Ramsay's saying it's an opportunity, obviously, to enter that growing UK market with mental health. Currently seeing its stock down about 0.8% at the moment. Francesco, how are you looking at Ramsay Health Care, particularly, I mean, mental health, and we know what the issue with that's happened, particularly during the pandemic. So do you see this as a good move?
Yeah, look, Ramsay's got a pretty good track record of acquisition, so I don't have a problem with the acquisition. It's around 1.4 billion Aussie. Their market cap currently is about 15 billion Aussie. So it's less than 10% of the size of Ramsay at this stage. So I don't have a problem with that. They're buying it off private equity. Always concerned there, but because it's a company that's involved in that part of the industry, I suppose I don't have a problem. Hopefully, they should do their due diligence properly on that. So hopefully they're not paying too much for the asset, albeit it's a large acquisition. It's not large in the scheme of things for Ramsay. Look, we've started to sort of become very positive on Ramsay in recent months or over the last 6 months, because we see that with the advent of COVID, a lot of elective surgery has been put on hold. And coming out the back end of COVID, we're starting to see the elective surgery start to pick up. There are a few constraints there. We've had presentations from the company. There are some issues around, particularly around the nursing levels. So getting personnel to actually fulfil a lot of these elective surgeries is a bit of a challenge. But look, I think on face value the acquisition looks good. It'll be interesting to see what the analysts say overnight when they sharpen the pencils and have a close look at it. We've got an accumulate recommendation on it. It's trading just under $70, 69 around there at the moment. Our analyst has got a valuation of around $74, $75. So there's a bit of upside in there. I like the healthcare sector. It trades on a fairly steep multiple, but that's natural for the healthcare sector. So in the scheme of things, I like the acquisition, but just want to see a little bit more detail around the numbers. Oh, and they're funding it through their existing debt facility, so it doesn't look like they've got to go to the market to raise money. Be interesting to see how far that takes their gearing levels though.
Yep, okay. So that's an accumulate from Francesco. Mathan, how are you seeing it?
Look, this is not a sexy stock. Never is. Francesco's right. I mean, look, this has got a great management, great track record. It's one of those ones that you keep on your list. When it gets beaten up for something going wrong, you buy it because it'll come good. But you don't buy it when everything is going good. Right now, you basically, healthcare stocks, if you're buying a healthcare stock, you're buying something new has to happen. Now, as I said, this is not sexy. It's never going to deliver you a massive growth rate. It's defensive, it's solid, well run, diversified, has a decent exposure into Europe. And if you look at the health situation in Europe, you go, well, they're going to be doing all right because there's problems everywhere. So in that context, I think it's a solid stock. If you have it, if you've held it for a long time, I don't think you need to rush out and sell it because it's solid. And these acquisitions, as Francesco said, they do execute quite well. And it's just a track record you can back. So is it going to, I don't see it being a massive mover. That's the problem. It's always a decent multiple on it. So is everything in healthcare. And so if I had to pick one, I'm picking a healthcare stock that's got a decent growth rate. So this is more hospital, obviously private hospitals, and services associated. If I'm looking for a more diversified play, we tend to look at things like Sonic, which has been a phenomenally good business model. So, and it's not cheap, and never is.
Yep.
Even through the pandemic, all the healthcare stocks showed that people come back and play catch up. So the numbers didn't really get affected. So any kind of lockdown, it's not going to be affected because the market now knows, don't worry about it, it'll be a catch up phase. So in that context, I think these guys are all solid. I'm not buying into it. I just don't see the risk return for me. But if you're a holder, I think you hold. So it's a hold for me.
Yep.
But yeah, I need to something that they need to do that's going to change dramatically, and they leverage so much to government spending. and healthcare is the massive part of the budget, and everyone's got a massive deficit. So guess what? At some point, every government's going to cut their healthcare budget, and that's the risk in this model. So that's why I'd be a bit careful.
Okay, that's a hold from Mathan